Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. You had a very good week, and you're preparing for the weekend. If you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel. So the reason why I haven't posted a video in the past couple of days, because to be honest, I gave you the blueprint on Monday and Tuesday on what I was expecting to happen. And basically, pretty much everything happened according to expectations. Once again, I've said this 100 times before. If there's any sign of the markets breaking, then the central banks, not just the Fed, central banks in general, step in and resolve the problem. So Bank of Japan, within 2 days after a rate hike, they basically came and told the market, in other words, that we're not going to hike rates anymore. And also they cannot hike rates for the same reason that the Fed and the ECB and the Bank of England. Some of them are already cutting. The Fed will cut in September, and they will cut, and more likely than not, within 2 years. So that's by the end of 2026, you should see rates at zero again. And once again, the problem is there's too much debt in the world, and the only way you can live with it is with 0% interest rates. The good part for these people is that they will find out again that actually lowering interest rates, you reduce the consumer price inflation. Now, you will increase the asset price inflation, the real estate, the stocks, the commodities, the crypto, etc., but not the consumer price inflation. So you're going to increase the good inflation, not the one that people get really pissed. And that's the only way that you can work within the system, is because there's too much debt in the system, and you'll need zero interest rates. And I think in the near future, when I say near future on this one, is within the next 5 to 6 years, you're going to see Fed funds rate negative for the first time. Why? Switzerland had negative rates, Europe had negative rates, Japan had negative rates. I'm not sure if England had negative rates, I don't think so. And China has had at some point negative rates. So it's written on the wall that the US will do it in the near future. And people think, oh, the reserve currency can never have negative rates, otherwise the other countries will not hold it. Yeah, you see, it depends. These things don't exist in a vacuum, okay? Like the US is not alone in the world. People always make this mistake. They think the US is the US is doing this wrong. True, it's doing something wrong. It's not the only one. So there are things called relative terms, right? You need to pick and choose from the options that you have available. You cannot pick and choose from what you would like to happen. Those things are very different. In any case, what happened? Japan hiked rates. It killed the whole carry trade. For those of you who doesn't know what that is basically you borrow in yen, because yen had a 0% interest rate. You convert to whatever currency you need, and you have access to capital very cheaply, and you bypass all these terrible interest rates in other regions. Even though you need to pay the cost of exchanging one currency for the other, most likely than not, that price will be cheaper than actually incurring in the loan in that exact currency. The point is, if that creates any kind of instability in the markets, my point is the central banks will step in and stop the carnage, which is exactly what Japan did within 2 days. Once again, whatever you want to say negatively about the US, here is Japan doing something much worse. So as long as these kind of attitudes keep on happening, like people say, oh, the Fed's going to cut rates, this is terrible. Yeah, but the ECB already cut rates. China is printing money non-stop for more than a year now. Japan barely can raise any rates before needing to go back and printing a lot of money. So what are you talking about? I mean, once again, you don't exist in isolation. It's very important to understand that. So for all the people that defend the de-dollarization and all of these things, which I think will happen, by the way, but it won't happen. Like if you watch any of these YouTube videos, it gives you the impression that it's going to happen in 3 weeks. No, it's going to take about 20 years for that to unwind, because the other countries have pretty much built their own dollar prison themselves, for themselves. So that's why when you are always curious, and why always people miss this, why it is that every time we have a big recession or a big crash in the stock market, why does it seem that people flee into US treasuries and they flee into the dollar? Why is that? Why in 2022 the dollar index rose to almost 120? I thought that the US was all printing money and was all filled with inflation and all of the sorts. Why in 2008, a crisis that began in the US, why did the dollar went from 70 to 120? Why does this keep on happening over and over and over again? And people go, I don't get it. I don't. Well, next time the dollar will crash. The dollar will crash. Sure. And what is gonna succeed? Is the euro gonna succeed? Why? They do the same as the US, but worse. So once again, I mean, people usually that say this kind of stuff, they have other intents. They sell you other stuff, most likely. Since I don't sell you anything, I don't need to BS you around with this kind of crap. So stocks have rallied after that. To be honest, they have rallied a bit too quickly for my taste. I would like to see a little bit of pullback to put some hot water into booming market. And but once again, if you've been here in the channel on Monday, if you were here on the live stream, I've mentioned immediately when everybody was panicking, when everybody was, you would go on YouTube and everybody was like this, and the bear market is here, and the recession is going to destroy the country, and the stock market's going to crash 50%. And of course, Harry then popped up with a prediction of the stock market crashing 80% and the Nasdaq crashing 94%, and all of this kind of stuff once again came along, and that was the bottom. And a small channel like this one with a random guy with a mask came here and told you this is the bottom, made that prediction very strongly, declared it on the day of the panic, not afterwards. You see, now it would be so easy for me to come here, yeah, that was the bottom. Yeah, but that is so easy to do, right? You need to do it in the middle of the chaos, the middle of the nightmare, the middle of the end of the world. And why was I so convinced of it? Because Janet Yellen, looking at the US in particular, Janet Yellen already has approved and is ready to go between $270 billion and $1 trillion in treasuries that can be deployed, in liquidity, ready to buy back treasuries, ready to buy this and that and the other, whatever it needs to be done to try to get Kamala Harris elected. It's already approved. People didn't pay attention because once again, you go on YouTube and you have people like this with the eyes bleeding red, with the eyes crying, tears of blood, and the end is here. And now we're gonna go to $2,000 S&P, and other Nasdaq's gonna crash to 10,000, and this is gonna crash, and the other's gonna crash. And of course, now they come and they say, oh yeah, we were bouncing off. You see, because it's so much easier to do that, to get engagement, right? If I come here and I talk about the end of the world in a day like that, I'm going to get a lot of engagement. But I cannot do it once I'm reading the charts. And you know what we were doing? Testing 50 weekly simple moving averages or 200-day weekly moving averages. That's it. Both of them represent the same. 50 weeks is a year, 200 days is about a year in business days. We are just retesting some moving averages. We're just letting off some steam so we can go up again. That's it. It's all managed by liquidity. It's all involved by liquidity. But you see, the problem with analyzing things like this is that once you understand it, it becomes very simple. And once it becomes very simple, it becomes pointless for you to buy anything from me. Get it? I don't mind telling you because I'm not planning on selling anything to you. But if you have a YouTube channel, which is all about selling you coupons, don't forget that Meet Kevin was advising people at the beginning of the week to, as soon as you see a bounce, start shorting, right? So for the people who done that on Tuesday and start shorting, they are now annihilated by Friday. Of course, somehow he will try to say that he made a lot of money in the process, despite unless he's taking trades opposite to what he was advocating. I don't know. But once again, it's the same problem. Harry Dent has been advising people to short the stock market since May 2009. For those of you who don't know, the bottom of the financial crisis was March 2009. He's been advising people to short stocks since May 2009 and to buy treasuries. Treasuries at some point in the bear market for treasuries went below 2006. So whoever followed this advice has managed to find the only asset that went beneath the bottom of the financial crisis, or in this case before the financial crisis, and he managed to give an advice that if people would follow it would be completely annihilated. And how can you see this? You see, Harry Dent has a fund. It's called Harry Dent Sector Fund. That fund has lost 60% of its assets under management for about in the last 4 years for being wrong consistently. Do you think it talks about it? No. Do you think it talks about those two funds that he founded before, and they went from being founded and delisted in a span of 2 years? That's how bad the performance was. Do you think it tells you about it? Do you think any of these media guys like David Lynn, that just interviewed him this week, do you think he asks him about it? No. He lets him spew the same horrific predictions. He's already said that he will retire if he's wrong. He already said, oh, if this doesn't happen by date X, I will retire. This is the third time that he's saying this. Do you think he's going to retire by 2025? Yeah, no, I don't think so. I think he will come back. And now he's going to say, oh, I will retire by 2027. And he will keep on doing this until the end. And by the way, it's not only him. And I will discuss a little bit about another subject, which is, first of all, to summarize, liquidity is the name of the game. As long as liquidity is increasing, as long as TLT, the bond market, is stable and hopefully rising, but it can go down, it just cannot go down 2% per day, then everything collapses. When I say collapses, you have big drawdowns, and until that side is corrected and stabilized, you won't have the other side. Understand that the bond market dictates the other markets. There's no way, right? When people, I want the bond market to crash 80%. No, you don't want that to happen, to crash like in record time, because then it crashes everything else. The crypto, Bitcoin touches that level on Monday. What happened? Bitcoin recovers, is now, at least at the time of the recording, above 60,000. I think we may go to 58,000 because that level was a bit of resistance. Maybe retest 58, go back up. In my opinion, I think we're going to see Bitcoin. I didn't want to say this because there's a big probability that I'm going to get screwed on this one. But I would expect, so call it a soft prediction. So if I'm right, I get soft credit. If I'm wrong, I get soft blame. I think Bitcoin will be above 80,000 on the second half of September. Now, don't ask me about the day exactly, but around the second half of September. If that happens, I'll tell you why I thought that and how I got to that number. But I do think that that's going to happen. I think after the second half of August, we should see some more live on altcoins. And here, altcoins mean anything else rather than Bitcoin. And I would like to talk a little bit, because people are always so focused about the negatives. I think it's important to also be aware of the positives coming into Q4 2024. Number one, Mt. Gox coins have been distributed. People are selling them. People are holding them. Most of the selling is now completed. Germany is out of Bitcoin. The DOJ doesn't seem to have sold any Bitcoin yet. China doesn't seem to have sold any Bitcoin besides the one they sold in 2021. Grayscale has $14.14 billion left in Bitcoin. They already sold close to 20 billion. So the majority of it has already been sold. Very good. Then, and you're still at 60,000, right? Then, FTX creditors will get their money in Q4 2024. How much of it is going to be? 12.7 billion. XRP has just settled the lawsuit for 125 million, is not a security, and it's the most security crypto of the famous cryptos, at least, that is out there. So that's good for everybody else tangling with the SEC. If Trump wins, you got a cycle on steroids. What else? Potential Trump win in Q4. There's a big rumor that China is looking to unban crypto, and Russia just legalized crypto mining in the country. And by the way, and finally, the Saudis are buying crypto like there's no tomorrow. So they will probably be adding to their strategic reserves in the near future. Let's see. The point is, nobody's paying attention to this yet. Why not? Because we are still struggling here to go above the all-time highs of Bitcoin, and we just had a major sell-off, and everybody threw their hands to the head. You would go to Crypto Banter and Discover Crypto and all of these guys. Bitcoin 30,000, Bitcoin 35,000, Bitcoin 45,000, whatever. That was the bottom, and now we get to go in. All of them were wrong, and all of them will keep selling stuff to you. Finally, the reason why I'm so convinced that the bottom for crypto was achieved is because I follow Peter Schiff. Peter Schiff in October 2022 said, and he already said a lot of things over the years, by the way, but let's go with the recent ones. October 2022 said, this is not a crypto winter, this is crypto extinction. That day was the bottom of the bear market. On Sunday to Monday, he was doing Twitter spaces for 2 and 3 hours into 2 in the morning, talking about how crypto is going to go to zero and everything's going to be destroyed and the world is coming to an end and the financial assets are going to collapse and everything's going to go to zero and gold is going to go to 5,000, 20,000, 50,000. Right? And he wrote as a tweet, he said that this was a crypto graveyard. As soon as Bitcoin dipped below 50K, he said this is a crypto graveyard. Very similar to the crypto extinction comment in October 2022. Once again, he was the bottom on the day, and here it is. Now, what I want to conclude this video is you need to understand something about these people. Peter Schiff, Harry Dent, and the likes. They do not make their money on the market. They do not make their money investing. They make money selling newsletters, selling YouTube ad revenue, going on television and speaking about the economy, managing funds and charging a lot of money for that, sponsorships, selling books, and the like. All of these things are part of the great talent they have in life. Their talent is not to forecast the markets, it's not to predict anything. Their talent is they understood how to monetize fear. Fear sells. That's why every YouTube finance video you see, if you type anything like world economy or world finance or stock market, 9 out of 10 videos are negative and guys with the hairs like this and the end is here and everything is finished and the world is coming to an end. And the key is fear sells. Why does it sell? It sells because we as a species have evolved by understanding what can destroy us, and we pay more attention to that than what can be good for us. So that's why we overpay typically for car insurance if you make an analysis between how much insurance you pay versus the likelihood of an accident and versus how much it would cost to fix the car on your own, etc., etc., etc. We overpay for things that give us safety because our fear is usually way above our greed or our positive side, if you will. So these people understand this perfectly. So what do is they manage to find a way to build a successful living by monetizing your fear. So if you come to them for the first time and you don't know anything about their track record and you just listen to them, all the stories sound very nice. Of course, they omit key things. Harry Dent is always comparing, this is going to be the next Great Depression, but he forgets to tell you that our currency is no longer linked to gold, which prevents a crash like that because you can just debase your currency, which you couldn't in the past. Peter Schiff forgets to tell you that in the 70s, because all of the people at the time thought about gold as money, they accumulated gold in a time that they were mostly fearful to understand what was going to happen to their currency, and they were all listening to stories about how the dollar will be the next, Germany hyperinflation of 1930. So people bought gold. Because people bought gold, gold price went up. Because gold price went up, what people did? They bought. And when the price went up, they bought more. And when the price went up, they bought more. So it's just simple FOMO and the bubble driven by massive change in the currency system when you had a lot of people that thought about gold as money. Nobody considers gold as money now. See, Peter Schiff forgets to tell you that much like MicroStrategy, you have a massive tech company in Japan about to put Bitcoin in their balance sheet. Who's putting gold in their balance sheet? Nobody, right? So the point is that you need to understand the key asset that all these people have. Jim Rickards is another one, Robert Kiyosaki, they're all the same. Their great achievement in life is they found out how to monetize your fear. And they prey on the fact that people don't spend 10 minutes to do any kind of due diligence on these people and to analyze if these people have a good or a bad track record. So they run, if you will, some sort of a Ponzi scheme, in the sense, it's not a Ponzi scheme legally speaking, I'm saying, which is they need new listeners and new followers to replace the ones that eventually leave because they are with them enough to listen and to see that their track record is terrible. So they need new followers to come in to feed the machine, while the old ones that have seen their performance over the years go to someplace else. And it's very simple. Peter Schiff sells you funds. He says at the end of any interview, go to Euro Pacific Capital, call these people, and we will help you, blah, blah, blah. You see, if I'm selling you a fund, and the fund that has been under operation for 10 years plus, what is the easiest way for me to sell my fund? If my fund is actively managed, that means you're going to pay a higher fee and potentially short-term capital gains tax, depending on when you live, by me going in and out of stocks. So my returns need to be very impressive to convince you to come to me instead of just buying a freaking S&P 500, Vanguard S&P 500, paying 0.03% fees with no capital gains tax because they don't go in and out of the S&P, right? So I need my performance is to be stellar for you to be willing to take the risk of paying higher fees and potentially capital gains tax due to my activity. There's something that Peter Schiff never discloses when he tells people to go to Euro Pacific Capital, which is his returns. Because his returns is barely up nominally. After 12 and 11 and 10 years of his funds, is barely 10% up or something like this. I think in some of his funds is actually down nominally, not even inflation adjusted, just outright versus inception. Okay? Just down. So that's because, if I'm selling you a fund and say, hey guys, you should join my fund, blah, 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 I have a great fund. Of course, I don't have a fund. I'm just giving an example. By the way, the average return of the S&P is 10% and my average return per year is 40. You say, oh my God, his average return is 40, it's 4 times the S&P. Then I guess it makes sense to go with him. No, but they don't tell you the returns of their funds. The fund of Harry Dent, by the way, is down versus opening a savings account in Australia. If you had opened a savings account in Australia, you would have more money than if you place your investment with Harry Dent's very expensive fund. And that's it. They are here to monetize your fear, to convince you to buy their stuff or to follow them or to somehow give them some money. And your returns will be always terrible, but it doesn't matter because they will just double down on their predictions over and over and over again, and they will keep collecting that nice passive income, and that passive income is called you. And with that, guys, thank you very much. Once again, I do think Bitcoin will be at above 80K on the second half of September. I am not so convinced about that one. I'm a bit torn apart between September and November. I'll throw a gamble. I'll say September. And let's see if I'm right. That's still a 20K away from here in terms of appreciation. But with that, guys, thank you very much. Enjoy your evening. I hope you guys, enjoy the summer. Weekend tomorrow. It's not everything about markets. Don't forget to like and subscribe, and I'll catch you in the next one.